$33.4 billion for AES. Tell me again how the M&A market is dead, Nate.
Was dead. Past tense, but a 319% spike in megadeals is not a recovery, Maya. It is a panic buy. GIP and EQT are terrified of their own dry powder.
Panic buy? Oh, come on. Taking a public utility private to escape quarterly earnings pressure is a highly calculated infrastructure play.
Calculated, right, like my calculated decision to expense a steak dinner. Let's look at the actual math on this buyout. The rundown, 319%. That is the year-over-year jump in megadeal value. The private equity guys are finally off the golf course.
They found cheap debt again. Improved financing conditions are a hell of a drug.
Speaking of drugs, or at least weird things people consume, Danone is buying Huel.
The official meal replacement of Silicon Valley coating binges, now part of the global yogurt empire.
I cannot wait to see the pitch deck synergy slides on this. Are they making Activia-flavored sludge?
Functional nutrition is a massive growth category, Nate. Don't knock the sludge. Though I do wonder how Danone integrates a brand built entirely on tech bro anxiety.
We'll find out. Moving from tech bros to blue-collar chic, Cintas is scooping up UniFirst for $5.5 billion.
The uniform wars are over. Cintas won.
A classic roll-up. Buy the competitor, strip the back office, raise the prices.
I checked the market share overlap. The FTC is absolutely going to wake up and look at this. You can't just consolidate the entire industrial laundry sector without someone in Washington throwing a flag.
Oh, come on, it's a highly fragmented market. There are thousands of local laundry services. Cintas will argue they're barely making a dent.
$5.5 billion is a very large dent. But fine. Let's talk about a deal the FTC might actually ignore. Del Monte Foods Corporation 2 is quietly selling off the family silver.
The great canned fruit carve-up. Fresh Del Monte is buying select assets for $285 million, and B&G Foods gets the broth business for $110 million.
Which is hilarious to me, B&G just buying a giant vat of broth. But honestly, it reads like a desperate liquidity play. They're stripping it down to the studs.
I completely disagree. This is classic trapped value. You carve out the non-core assets to strategic buyers who actually want them. It's clean. It's efficient.
It's a fire sale. Look at the multiples on that broth deal.
We can argue soup valuations later. We need to talk about Netflix buying Interpositive.
The AI filmmaking startup.
Pure AI FOMO. Everyone is terrified of being left behind.
I actually read Interpositive's technical white papers. They have legitimate predictive rendering tech. Netflix isn't just buying hype here, they're buying a way to cut post-production costs by 20%.
If you say so. I just see another tech giant throwing cash at the letters A and I. But speaking of throwing massive amounts of cash around, we need to get to the main event.
$33.4 billion.
GIP and EQT taking AES private, a true monster of a deal. The big one. $33.4 billion, just say it out loud. It feels good.
You're way too excited about a utility buyout.
I'm excited because the debt markets are finally awake. GIP and EQT teaming up to swallow AES Corp whole. This is the kind of monster transaction I used to dream about when I was building models at 2 a.m.
And charging the client a cool $50 million for the privilege. But look, the number is staggering. Megadeal value is up 319% year over year. That's not a typo. 319%.
Because financing conditions are actually workable again. Private equity is sitting on mountains of dry powder, and they're looking at public companies like AES and seeing trapped value everywhere.
Trapped value, I hate that phrase.
What? It's a perfectly good phrase.
It's banker speak for, we think the public markets are stupid and we can squeeze more juice out of this lemon in the dark.
Okay, but are they wrong? AES has an incredibly complex portfolio, renewables, legacy power, grids in multiple countries. EQT and GIP can take this private, strip it down, optimize the green energy transition away from quarterly earnings calls, and flip it in 5 years.
I'm not saying it's a bad strategy. I'm just looking at the price tag, $33.4 billion. You don't just find that kind of loose change in the sofa cushions. They're paying a massive premium. The analysts are all crediting improved financing conditions, but I actually think it's pure FOMO.
FOMO for a power company? Oh, come on.
Yes, hear me out. Look at the other deals happening right now. Netflix is buying into Positive just to get their AI filmmaking tech. Everyone is chasing artificial intelligence. But what does AI need more than anything else? Power. AES runs the grid. GIP and EQT are just buying the picks and shovels for the AI gold rush.
That's actually smart. I didn't even think about the data center angle. I was just looking at it as a classic infrastructure play.
Which it is. But if you read the press release, it's a masterclass in corporate buzzwords. They use the word synergies 12 times in the first 3 paragraphs. I counted.
You actually counted.
I always count. And whenever they say synergies that many times, I start looking for the real story in the footnotes. The regulatory hurdles on this are going to be a nightmare. FERC is going to have a field day.
They've got the lawyers to handle it. The big takeaway is the ceiling is completely lifted. Zurich dropping $10.8 billion on Beazly. Cintas buying UniFirst for $5.5. Even Apollo taking a 37% stake in Syntagon from CVC. The floodgates are open.
True. But speaking of things that are hard to swallow, voices.
I was reading an analyst note this morning arguing that private equity is getting aggressive again, specifically to, quote, unlock trapped value in public companies. And obviously they're pointing right at GIP and EQT, taking down AES for $33.4 billion.
Trapped value. I love that phrase. It sounds like the value is stuck in a well and PE is flying in on a helicopter to rescue it.
Hey, sometimes it is stuck in a well. When public markets punish a stock for 3/4 of missed guidance, that value is effectively trapped.
No, it's just correctly priced for bad management. Trapped value is just a polite way of saying we can fire 20% of the workforce and lever it up without public shareholders complaining.
Spoken like a true cynic. But you can't argue with the volume. Megadeal value is up 319% year over year. The financing window is wide open.
I'll give you the financing conditions. That part is true. But the other analysts' take floating around is that AI is the primary catalyst for the rebound, which feels like a huge stretch. Yes, Netflix bought into Positive for AI filmmaking. But Danone swallowing Huel, Zurich dropping $10.8 billion on Beazly, Cintas buying UniFirst for $5.5 billion, none of that is AI. That's just corporate America buying revenue.
True, uniforms and meal replacement powder are notoriously low-tech. Though speaking of drama, did you see Nibiru suddenly reactivated its binding agreement for a 70% stake in Techne?
Wait, really? That deal was completely dead in the water.
Exactly. Somebody finally blinked behind the scenes. Or maybe they looked at Del Monte carving up its empire for scraps and decided it's better to be a buyer than a seller right now.
$285 million to Fresh Del Monte, another $110 million to B&G for the broth business, just quietly dismantling the house.
We love a good garage sale, but we need to talk about who is doing the shopping overseas tomorrow. Spill the tea. I still cannot get over the naming conventions in the canned fruit space.
It is a nightmare. You have Del Monte Foods Corporation too, quietly carving up its empire this week.
Right, and who are they selling select assets to? Fresh Del Monte for $285 million. I just picture 2 guys named Mr. Del Monte sliding a term sheet across a very sticky table.
Do not forget the broth.
Oh yes, the broth? B&G Foods is buying the broth business for $110 million. Just the broth.
Carve-outs are messy, but B&G loves a legacy grocery brand. But if you want actual boardroom drama, look at Nibiru.
The laser guys, I thought that deal was dead.
Exactly. They had a binding agreement to take a 70% controlling stake in Techne SPA, and it just totally stalled out. Radio silence. Now, suddenly, it is reactivated.
Someone finally blinked. You know there was a massive screaming match over valuation in a Milan hotel lobby. That is the only reason a binding agreement stalls and then magically resurrects.
You always want it to be a soap opera. Read the macro data, Nate. Market analysts are literally pointing to improved financing conditions this month. The credit markets thawed out. Nobody was screaming in a lobby. They were just waiting on a bank. Plus, US outbound M&A activity is surging 155% right now. Everyone is hunting internationally.
A banker can scream in a lobby. I used to do it all the time.
I do not doubt that. But speaking of deals that are finally crossing the finish line, we have a massive close happening tomorrow.
Oh, Abbott and Exact Sciences?
That is the one. And looking at their filings, I have some major questions about how they actually plan to integrate those sales teams. Tomorrow's radar.
So Abbott finally closes on Exact Sciences tomorrow, and I'm telling you, that integration is going to be an absolute nightmare.
Oh, come on. Abbott has integrated way messier targets. They have the playbook. I'm actually more focused on the macro data dropping tomorrow.
You mean the outbound US deal volume?
Exactly. It's up 155%. Everyone's shopping overseas. Just look at Nibiru suddenly reviving that stalled 70% stake in Techni. Somebody clearly kissed and made up behind closed doors.
The lawyers finally got paid. But my favorite weird radar item for tomorrow is Del Monte Foods quietly selling assets to Fresh Del Monte for $285 million.
Wait, selling part of themselves to a company with basically the exact same name?
Right? It's the corporate equivalent of Venmoing your roommate. Plus, they're dumping their broth business to B&G Foods for $110 million.
The great Del Monte carve-up. We'll be watching the SEC filings tomorrow to see who else decides to chop up their empire.